Yesterday on the programme we heard how pleased investors have been with Stallman. Yeah. I guess they're still pleased again. The company's performing well enough for shareholders.
Company's performing well, and the numbers are great, and then you see the market reacts positively if the numbers are good. Also, it reacts negatively if the numbers are not fulfilling the expectations, like the Gabarita, as you mentioned.
Okay, and in general, third quarterly earnings, what's your reaction?
No, the numbers itself were not so bad. Earnings were up quite a bit. Sales were up quite a bit. So most of the companies had very huge and large expectations by the analysts, and it was, if they didn't fulfill everything, then the stock market crashed, the equity. And some of the companies also made some, let's say, more weaker outlook for fourth quarter next year. And the market didn't like that.
And isn't that the key, though, is that we're now starting to think more about, rather than the results, it's more about the outlook for the companies, because we're coming into this late cycle, we're coming in up against, well, companies starting to talk about trade war and the impacts that it has on company results.
Yeah, you mentioned it. When we have this, once a company mentions trade war, then it gets difficult for them. When you see it with companies that use steel, raw material gets more expensive, and you mentioned it. We are now approaching, let's say, the late cycle in the economy in the US, but also in Europe, and now people start to think about how long could these good earnings go on.
And how long could they go on?
And I think they could go on for, let's say, another 6 to 9 months. But then if I look farther forward to the end of 2019, then you have to ask yourself, really, does the economy is getting a lot more weaker than it is now?
And with regards to markets, are we starting to see them into correction territory across the board? Of course, we had the S&P 500 last week, and the Dow even dipped into correction territory yesterday, I believe. So are we starting to see that happen across the board?
I don't think so. I mean, we're trading, if you take the Swiss Performance Index, we're trading in quite a large range between 10,000 and 11,000 since beginning of the year, and we are still within this range. And I do believe that as long as the economy is doing well, and I believe over the next couple of months it will do well, we will remain within this range. So let's say the lower bottom would be 10,000, that's Swiss Performance Index, and 11,000 on the top. We were at 11,000, or more or less at 11,000 end of September. Now we're going back to the direction of the lower edge of the band.
All right. I want to talk about tech stocks, because it's been a massive talking point for us here on the programme this week, and indeed, you know, around the world. From our Swiss-based guest this week, we are hearing that tech can now be used as a defensive strategy. Would you agree?
No, I wouldn't agree. When I take a look at Amazon, Amazon, of course, is in a consumer sector, that's more a defensive sector. But if I take a look how the market reacts to the numbers of Amazon, it's not looking at the earnings, it's looking at the growth. And as long as the tech stocks are seen as the growth stocks, I don't believe that you could use them as a defensive part of your portfolio.
So where are people going for the defenses? Is it just the bellwethers like pharmaceuticals?
Yes.
Okay. What about this idea from France and the United Kingdom to issue taxes on tech stocks or tech companies? Do you think this is a good idea?
Taxes are never a good idea.
Good point.
So I don't think that's a good idea. I also believe that it will be quite difficult to really implement these type of taxes. Because, you know, also tech stocks or tech companies are quite mobile in the area where they place their business.
But it's not fair. I mean, tech stocks or tech companies are undoubtedly at an advantage to be able to register their businesses wherever it is most tax efficient.
That's true, but also other companies have the same advantage. All the service companies more or less have the same advantage. That's a disadvantage for, let's say, the industrial companies, where it's more difficult, a lot more difficult to change the production sites. But for all the service companies, it's quite easy to transfer their business from one country to the other.
You say it's not a good idea, but do you think it's likely to happen?
They will try, definitely. They will try. I don't know if they will succeed, but they will try.
Okay, on a global scale or just more as a per country?
More on the European scale. at the beginning.
GE today slashed dividends to £0.01 a share. The company's in big trouble. How do you think this could impact us here in Switzerland? Because, of course, it's one of the major industrial employers here.
Yeah, that's true. I hope that they will recover, but I'm not quite sure if they will do.
Okay, so would you be concerned if you worked for GE in Switzerland tonight?
I would say it wouldn't be my most happy. I don't believe that they will go bankrupt in the next couple of months, but as they have to change the business to get more profitable again, unless they will have difficulties really to survive.
Okay. Something else we've been talking a lot about on the programme this week is the reaction to Sergio Motti from UBS. And what he said about the Swiss National Bank, and that it was a kind of they were the biggest hindrance to growth in the Swiss economy. As a former SNB man yourself, I wanted to get your thoughts on what he had to say.
He mentioned the negative rates, and he mentioned the balance sheet of the SNB. With negative rates, of course, negative rates are not good for banks because they have to pay on the liquidity. I would say negative rates cannot be here for eternally. So an S&P once in a while have to come back into a positive interest rate territory. Money needs to have a price again. So I agree with him with negative rates. I don't agree with him with the balance sheet. I do not believe that the size of the balance sheet is a huge problem for the S&B and for the country. It's big. It's larger than the GDP, but it's not a big problem for the National Bank to have such a huge balance sheet.
So what are the main challenges ahead for the Swiss economy then?
Yeah, the main challenge is the European economy and the world economy. You know, Switzerland is an export-orienting country. It's depending on car manufacturers. It's depending on other machinery manufacturers. So if you would see, let's say, a further going down in the mainly in the European economy, but also in the Asian economy, then the Swiss economy would also suffer. The growth rates would be lower. I do not believe that we will face a recession within the next 2 or 3 years in Switzerland.
Okay, but certainly the warning signs are on, given today's news that growth in the Eurozone has halved in the last 3 months.
Yeah, it has halved in the last 3 months, but it was larger than normal in the past in the Eurozone. Of course, you mentioned the cough leading indicator. It's now on the average of Swiss growth, but that's still good. That's still good. So I do not believe that it will go below 1% for next year, but it will not, let's say, the same growth rates that we see 2% plus in this year.
Okay, thank you very much, Thomas Stucki, Chief Investment Officer at St. Kantonalbank. Thank you very much indeed for joining us.